Hello traders, and welcome to another video review. Today is Friday, April 7th, 2023. Let's find out what's going on the Forex calendar today. As you can see, the main event of the day, main event of a week, of a month even, are of course the non-farm payrolls data from the US. Yes, today is the non-farm Friday. All payrolls Friday, together with the non-farm payrolls that are scheduled for release at 2:30. There is unemployment rate for the US scheduled for release as well at 2:30. Non-farm payrolls are expected to decrease from 311,000 to 239,000, but the unemployment rate is expected to stay at the same level of 3.6%. So any surprise here in unemployment rate or in non-farm payrolls, it doesn't matter, to the upside or to the downside, might increase the volatility significantly. So please stay focused during this data release, because as I said, the volatility will be increased, especially if the market participants will be surprised by the data. So, what kind of currency pairs will be affected by the non-farm payrolls? Let's take a look at the technical picture of the euro-dollar, gold, S&P 500, and maybe we will take a look at the US dollar to the Japanese yen. So, let's start with euro-dollar. Euro-dollar 4-hour chart is very clear for the current situation. So what do we have here? Apparently is the uptrend, and we keep bouncing from around the 50 periods moving average. Let me just place 100 periods moving average. There you go. And just recently we have done this high here at the level of 1.0974. So the local during the pullback, the local support had been established at 1.0884, and since then, of course, we have been trading in a horizontal range. The intraday technical resistance is located at 1.0936. There used to be very big resistance located at 1.0930. This is that level that I'm marking for you guys right now, so please be careful, because that's just a marginal breakout and we are back under this technical resistance. So it might be basically false breakout building on the weekly time frame chart. Okay, so any data better than expected, which means the non-farm payrolls will break the last reading of 300,011. If of course result in a massive rally in the euro dollar, especially if the unemployment rate will drop below 3.6%. The unemployment rate is still holding at the historically very low levels for the USA, so it might just seems appropriate to find out this situation here as a very good for the risk, which is why the euro should be bought and the dollar should be sold all over the board. So that's the very simple situation on the euro dollar ahead of the non-farm payrolls. Of course, please be careful with the technical support 1.0884. There is 50 periods moving average located very close to this level. Another technical, let me just point it out, another technical support is of course the low from the April 3rd, which is 1.0789. So this would be the next target for the bears in case of a sell-off. That's the euro dollar. Let's take a look at the S&P 500. What is going on here? As you can see, just recently the S&P 500 has been rallying a little bit higher. The bulls broken above this level 4080, so that's fine. The next let me just zoom out. The next target for bears, maybe now for bulls. For bulls, the next target is the swing high from the beginning of the February, 4195. So this is the next target for bulls. We are still moving inside of this. If we can apply it, it would be kind of a very tight channel. But what we are going to see is we will apply the regression channel. So, and what we are going to see is a very nice regression model There you go. So as you can see, this regression channel is showing us that the market keeps moving between this basically two halves, the pink one and the blue one. So from the upside to the downside, oscillating from the upside, and the upside was hit 4,145, and now we are around the middle line and the market is ready to move higher. Why? We have the 50, we have the cross, moving average cross, 50 crossing 100. That's the first thing. The channel is pointed to the upward, to the north, yeah. So it's the upward sloping, increasing channel, or rising channel. We are very close to the next technical level for the bulls, right? So that's the 145, 95, 50 points away from the highs of the 2nd of the February. So that's nice. The other situation here is that the technical support, as you can see, had been tested. So now the market is ready for another leg to the upside. Momentum is strong, momentum is positive. So if the risk on mode is triggered on the financial markets today by the NFP payrolls, we should see more upside on the S&P 500. Another market we would like to talk about is gold. For our chart of gold, we talked about it yesterday. Just a quick recap before the non-farm payrolls data release. We have the twisted top at the level of 2031, and just a short-term technical situation for the gold here. Twisted top, and just a small, I guess, kind of a pullback has been in progress towards the level of 2009. I guess that the level of 2000, which is the psychological level, will gather more attention soon, because this is the level that will basically draw like a magnet the market participants, both bulls and bears. So right now we tested the $2,000 per ounce of gold. The low was exactly at $2,000, and we are just steadily pulling back from the recent high 2031 dollars. So please expect another movement to the upside if the risk on is triggered across the financial markets because of the NFP payrolls data. We should see deeper bounce, deeper reversal, deeper correction, maybe not reversal, but the correction. 1, 2, 3, 4, 5 ways to the upside is done. We should see deeper correction towards the level of 1,990. Please notice the fact that we're still trading above the 50 and 100 periods moving average. The RSI is kind of a flat at 54 points, so it's just barely above the neutral level, and we should see some sort of the decline here towards the level of 50, and then it depends on the data. Maybe bounce, maybe continuation of the correction to the downside. So that's the gold. And last but not least, let's take a look at the US dollar to the Japanese yen. This market is very often under the influence of the NFP payrolls data. So what do we have here? Very nice decline to the downside. We have the local low at 130.65. Okay, this is the pin bar, another pin bar with a long shadow, down shadow. Okay, it's not the upper shadow, it's a down shadow, which means that the bulls are buying the dips. So if we take a look here, let me just get rid of the magnet. There you go. If we take a look here, we can see clearly that the technicals, this line, the short-term trend line, had been violated. Okay, that's fine. And right now, well, the outlook should be bearish because the momentum is at the level of 51, so it's, kind of a neutral, barely positive, and the market is getting closer to the 50 and 100 periods moving average on the 4-hour chart, and there is a cross. Again, there is a cross which doesn't seems to be valid because this is the 50 crossing the 100 to the upside, but there is no extension to the upside whatsoever. Maybe data will trigger more movement on the US dollar to the Japanese yen. The next target is 132.65. That's the next target for the bulls, of course, and in the case of the reversal, because that area here is too strong, we might have some kind of a reversal to the downside and test of the 130.65. So it's all data dependent these days. Please, again, stay focused, stay vigilant during the data release 2:30 today. NFP payrolls are coming up. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.